Something really fascinating is happening in the crypto market right now. It feels like it's splitting into two completely different worlds. On one side, you have these absolute giants building impenetrable fortresses. And on the other, you've got these promising contenders that are starting to show some deep, really dangerous fault lines.
And that brings us to the big question we're tackling today. Is the crypto market finally growing up, or is it actually just breaking apart? Let's get into it.
All right, first up, let's talk about the titans of the space. Because look, these established players aren't just surviving. They are actively locking down their power and building for a future that goes way, way beyond the next bull run.
I mean, just look at Ethereum. They've totally shifted their game plan to something they're calling strategic austerity. So what does that even mean? Well, it means they're hitting the brakes on rolling out flashy new features. Instead, every bit of focus is going into making the network more secure, more stable, and ready to scale. They're playing the long game here, building a solid foundation.
And you know what? It really seems to be paying off. The amount of Ether being staked on the network, which is basically people locking up their coins to help keep it secure, has just hit an all-time high. And that's not just a statistic, that is a massive vote of confidence from the entire community. It shows people really believe in this more careful, long-term vision.
Okay, so from the world's biggest smart contract platform, let's jump over to its biggest stablecoin issuer, Tether. This company has almost quietly become an absolute financial monster, and what they're doing right now is, well, it's pretty mind-blowing.
Just get a load of this number. In a single year, Tether pulled in over $10 billion in net profit. To give you some perspective, that's more than a lot of huge, publicly traded companies. This isn't just some crypto project anymore. It's a global financial powerhouse.
And the way they're making that money is really the key to their whole strategy. If you look at the reserves, the huge majority of it, we're talking over $140 billion, is parked in super safe U.S. Treasury debt. Plus, they've got a massive pile of gold, more than $17 billion worth. It's clear what they're doing. They're backing their digital dollar with the most traditional, stable assets on Earth.
And they're using all that cash to build an honest-to-goodness empire. They're pouring money into crazy advanced tech like humanoid robotics and AI. They're buying up so much physical gold that they're now a major force in that market. And at the same time, they're expanding their main business by launching UST, a new stablecoin built from the ground up to play by US rules. They are absolutely building a fortress.
But now, let's pivot and look at the other side of this whole split. Because while the giants are getting stronger, some of the top challengers are under some serious pressure. And wow, you can really see this happening in the Solana ecosystem.
The network of validators, the computers that actually secure the Solana blockchain, has shrunk by a lot. We're talking a drop of nearly 2/3 from its peak. That's a huge deal, and it's sparking some pretty intense debates all over again about how decentralized and really how resilient the network is.
And this weakness isn't just some abstract problem you see on a chart. No, it has had very real, very painful consequences for the projects that are actually trying to build on Solana. Just look at what happened with Step Finance. It was a total domino effect. First, its treasury gets hacked, and boom, about $30 million is gone. Naturally, that caused the project's token price to completely crater, and in the end, they had no choice but to suspend operations. It's a classic cascading failure, and it just goes to show how fragile things can get when your foundation isn't solid. And listen, this isn't just a Solana story. What's happening there is part of a much bigger market-wide reality check for the thousands of projects that are trying to make it outside of that top exclusive club of giants.
You don't have to take my word for it. Even the insiders are trying to cool things down. Ripple's own CTO, David Schwartz, had to come out and basically tell people that the wild price predictions for XRP were just not connected to reality. When an insider says that, you know the era of pure hype is facing a serious reckoning.
The data tells the same story. Recent reports show that literally millions of crypto tokens created over the past few years are now basically dead, either completely inactive or totally abandoned by their creators. It just highlights the incredibly high failure rate in this space.
And a big part of what's fueling this whole cycle is a market culture that's just obsessed with instant gratification. Analysis shows a ton of traders, especially in the Bitcoin market, are just focused on these super short-term price swings. And that creates a ton of volatility, making it really hard for projects with actual long-term goals to get any kind of stable footing.
Okay, so with this huge split happening, where do we go from here, right? What's the path forward?
How do we build a bridge between all the amazing promise of this technology and real, actual sustainable value in the real world?
Well, a huge piece of the puzzle is tokenization, and this comparison right here makes it so clear why. On one side, you've got the old world of finance, 9 to 5 hours, closed on weekends, waiting days for things to settle. But a tokenized future, it's 24/7 trading, global liquidity, and instant settlement. This is exactly why huge institutions like the NYSE and Nasdaq are getting very serious about this.
And we're already seeing projects out there that totally get this. VeChain is a perfect example. From day one, they've been focused on, well, kind of boring, practical stuff, logistics and supply chain management. They made a conscious choice to prioritize getting adopted by real businesses instead of chasing speculative hype, and that has carved out a solid, sustainable niche for them.
So it all brings us back to that central question. As the crypto world keeps splitting between these fortified giants and the high-risk, high-reward challengers, where is the real, lasting value going to end up? Will it be with the stable, powerful players who are already on top? Or is there another breakthrough, another big risk, waiting just around the corner to change the game all over again? That's the great divergence we'll all be watching.